I've spoken with thousands of inventors. It's amazing how many believe their patent is worth $1 million. Hi, I'm Raymond Hegarty, IP advisor to high growth life science and technology companies. I'm also the author of 3 best-selling books on IP strategy for business. Are they all worth $1 million? If you laid out 100 patents, would they all be worth the same amount? Clearly not. Perhaps there's an average value, with some worth less and some worth more. The smarter of you may think that it follows a Pareto distribution, with the top 20% of patents accounting for the top 80% of value. Let's see what the research shows. According to a study by the UK Intellectual Property Office, 97% of all patents have a value lower than the cost of creating the patents. The top 3% account for most of the economic value. If you're ambitious, you may think that you are in that 3%. I should remind you that some big companies like Apple and Novartis and IBM have very good patents, and some of their patents will feature here. They have a lot of patents, so others will be distributed elsewhere in the spectrum too. And if you really follow the law of averages, it's more likely you're somewhere in this area. The reality is that most patents have negative net economic value. Let me tell you a story about one patent that had a value of $1 million, $500,000, $6 million, and $20 million, all in a very short time. This is 4 different values for the same patent, because the context sets the value. If you change the context, you change the value. But that still doesn't answer your question about the value of your patent. You say, Raymond, I understand about context, but when is my patent worth the most? These days, patents are most influential during financial decisions such as funding rounds and exits. Let's take the example of an exit. Exits are calculated based on a multiple. In a software as a service exit, the sales price is the annual recurring revenue times the multiple. In a traditional exit, it could be the EBITDA times the multiple. EBITDA is one way of looking at profit. Multiples are down since the heady days of 2021. Multiples vary by industry. You can look up typical values in tables. The interesting thing about multiples is that they're subjective and can be shaped by the view that the investor takes of you. The multiple is based on a view that the investor takes about the quality of the earnings and how long those earnings will persist for. If you have a trusted brand protected by a trademark and perhaps a technology that's protected by patents, they are all signals of quality and persistence. In other words, IP can shift that subjectivity and boost multiples. Let's look at some numbers. If we take the example of a company with a profit of $3 million, on exit the sales price could be 2.5 times the EBITDA, or $7.5 million. Even with some basic IP protection, the investors see signals of quality and persistence that could nudge that multiple up to 3 times. That's with basic IP, but there's another level with strategic IP. When you have a well-articulated IP strategy, some granted patents, a pipeline of patent applications, trademarks and trade secrets under control, that multiple can easily become 5 times or greater. That would lead to a valuation of $15 million. Look at the uplift you can get on that $7.5 million price. With some IP, you're already getting a $1.5 million gain. And with strategic IP, the benefit is $7.5 million or greater. How much would that IP cost? Your lawyer or patent attorney should be able to file a patent application and a trademark for about $25,000. And with an uplift of $6 million, it might be worth splashing out a bit more on bringing in an IP strategist. You can see that the return on investment in IP can be considerable. And the impact is even greater with deep tech. How much is my patent worth? Is the wrong question. You want to know how much your business can be worth with the right IP strategy. And just another bit of IP strategy right here.